Good afternoon. Thank you for joining us for today's webinar, Provider Relief Fund Reporting, What You Need to Know. I'm Wendy Johnson with the Pennsylvania Healthcare Association. Before we begin, I have a few housekeeping items to cover. PHCA offers monthly webinars to members to receive updates from department staff on regulations, learn from industry experts on current trends and practices, and to gain a better understanding of practical application tools to equip you so that you may continue to provide the highest level of quality care possible. This webinar is being recorded and will be made available on the PHCA website. The webinar has been approved for 1 continuing education credit for PHCA members. Credits will be uploaded to NAB within the next 2 weeks for those of you who have provided us with your unique NAB number, and I will be sending attendance certificates. A survey will be launched at the close of the webinar. Your feedback is very important to us and our speakers, so please take a moment to complete the survey. All attendees will be in listen-only mode. However, throughout the presentation, please feel free to submit questions using your questions pane on the right hand of your screen, and our presenters will address them at the end of today's presentation. Today's webinar is being presented by Stephanie Kessler, partner, and Desiree Mauriello, manager, both with RKL. I'll now turn the webinar over to Stephanie and Desiree.
Thank you, Wendy. And thanks everybody for attending the webinar today. We are going to go through the Provider Relief Fund reporting. I think all of us were anxious to get the reporting requirements, and HHS finally published that on June 11th. We were expecting it in the beginning of the year, but there were some pleasant surprises and some maybe unpleasant surprises in the reporting document. And what we're going to do today is go through some of the timelines, when you need to expend funds, when you need to report on those expenditures, those different reporting timeframes, walk you through what it's going to look like when you go into the reporting portal, and then go through some frequently asked questions, some that are posted on the HHS website and some that we have received through the presentations that we've provided up to this point that we think you all may be interested in. So as always, the information presented today is as up to date as the information that is posted on the HHS website as of this morning, and Wendy went through some of the housekeeping items. So the first thing that we're going to talk about is the reporting updates and the time frame. As I mentioned, HHS issued the Provider Relief Fund General and Targeted Distribution post-payment notice of reporting requirements on June 11th. And it really outlined all of the reporting for any of the past and any potential future payments that will be made related to the Provider Relief Fund. So this table shows you the different reporting periods. There are 4 different reporting periods, and they are based on when you received the funds. So the first general distribution was issued to providers on April 10th, and any payments that were issued between April 10th and June 30th of 2020, the deadline to use those funds was June 30th of this year. So about a month and a half ago was the deadline for the use of that additional tranche of funds. The period 2 are payments that were received between July 1st and December 31st of 2020. And the deadline for the use of those funds is December 31st of 2021. So you can see from the payment received period, that last date of when the funds were received, you essentially have 1 year to expend those funds. So then period 3 was January 1st of this year through June 31st of this year. And period 4 is funds that were received or will be received July 1st of this year through the end of this year. So the recipients of the funds can use the payments for any eligible expenses that incurred due to the receipt of those payments, as long as they were used to prevent, prepare for, and respond to coronavirus. Although the time frame that they said that you can use or that you can capture expenses goes back to January 1st of 2020. They don't expect that there were any expenditures prior to January 1st of 2020. I think we are seeing most providers didn't have expenses until mid-March, really when Pennsylvania issued the public health emergency. Then we started to see some impact in expenditures related to that. So the reporting is required if you received one or more payments that exceeded $10,000 in the aggregate during the payment received period. So if you received $10,000 or more in that reporting period, you are required to report during the time frame. So we are currently in the period 1 reporting time frame. Any of those period 1 payments received again April 1st through June 30th of last year, that should actually say April 10th of 2020, not 2021. We'll have to make note of that. The reporting time frame is July 1st, 2021 through September 30th. So you all, if you have not submitted your reporting yet, hopefully you are working on that and are well on your way, because that first reporting period is due the end of September. If you do not report within the time frame, you are then out of compliance of the terms and conditions which you attested to when you accepted the funds, and it could be subject for recoupment. So it is important to make sure that if you received more than $10,000 during that time frame, that you get all your reporting done at the specified time periods. So essentially, from the end of the payment received period, you have the reporting period is the 3-month window after the end of the payment received period. So from a recoupment standpoint, if you don't report timely, you're subject to recoupment. If you have unused funds for the time of availability, you are required to pay those funds back within 30 days after the end of the reporting period. So if you go through the calculations, and Desiree is going to walk you through all the information that you're going to need for the reporting and how those calculations will work. If you get to the end of the reporting, you go through all of your COVID-related expenses, you go through lost revenue, and for any of those funds that were received between April 10th and June 30th of 2020, if you did not expend those through expenses or lost revenue by June 30th of this year, they will recoup the amount that you did not expend, and you are required to pay that back by October 30th. So you have 30 days from the end of the reporting time frame to submit any of those unused funds. There are instructions and links in the portal to explain how to return those funds. And there's also FAQs in there as well. So this just gives you a summary of the reporting requirements for the different periods, when the payments are received, what the deadline is for using the funds, and when the reporting time frame is. And then the last would be the recoupment of funds, which is 30 days from the end of that reporting time frame. So I am going to turn it over to Desiree, and she is going to walk you through the responsibilities for reporting and what the portal is going to look like.
Thank you, Stephanie. So the responsibility for reporting is based first on TIN. So if you have several facilities, but they all have a different TIN, tax identification number, then you'll have to report separately for each of those TINs. If you have a parent entity, that parent entity can report for subsidiaries, but that's only for the general distribution. So for those targeted distributions, like the May 22nd SNF distribution and the August infection control distributions, those all need to be made by the entity who received the funds, whether they're a subsidiary or whether the parent received them directly. When you log into the portal, you will be able to see what funds the portal thinks your entity should report on. So that'll be pre-populated, and that'll all be based off of your registration. The other thing to note with the responsibility for reporting is when you do register, you have to make a separate account for each TIN. So if you have 4 facilities with 4 different TINs and all 4 are reporting on their own, they're not part of a parent, then you will need to make 4 separate accounts. They can all be linked to the same email, but they will be 4 individual accounts. Okay. So this just again reiterates that the target distributions, which are those May 22nd, August, and then anything received in those incentive infection control payments, are always done by the recipient. So they cannot be reported by the parent. And if they are if they're the subsidiary, they have to do it. It doesn't matter whether they're a parent or not. And this is specific to those distributions. Okay, so once you know who's reporting on what, you're going to actually do the reporting. So there's 6 main steps of information that you're going to input, but when you go into the portal, it'll actually be 16 steps. So the first couple steps are all going to be basic information, reviewing your entity, your subsidiaries, all the things like that. And then eventually you'll get to these 6 main pieces, and the pieces you're probably going to have the most questions on, starting with interest earned on PRF payments, other assistance received, the infection control distribution payments, so that's referring to the expenses you used for those distributions, then the expenses you used for the general and other targeted distributions. The other targeted distribution would be that May 22nd payment, which was the nursing home distribution not associated with infection control. Then you'll have unreimbursed expenses, and then finally lost revenue. And we'll go into each of these items in a lot more detail in the next couple slides. The one thing I will note is that everything is going to be based off of how you do your accounting books. So if you say that you're a cash basis entity, then you should be reporting using your cash basis numbers. If you're accrual, which I would expect most of the people on this call are using the accrual accounting system, that's how you're going to base your expenses and your lost revenue. Okay, so this is step 1 through 6. So your reporting entity, some of this stuff will be pre-populated based on your registration, and this should just all be stuff that you've probably filled out on all the other forms at this point. So your TIN, your business name, address, contact information, and the type of provider you are. Question number 2, that's kind of going back to what we discussed before. If you're reporting on your general distributions for any subsidiaries, in question number 2, that's where you're going to disclose that. You're also going to disclose, in question 3, that's where you're going to disclose if you acquired, divested, any subsidiaries. So the one thing I will note is that you do want to disclose here acquisitions or divestitures, even if you're not reporting on them. You'll report the date, the PRF payments, who's the controlling interest is, all of that information, which is similar to what you would have reported in your phase 3 applications if you completed those. Now, number 4, interest earned on PRF payments. So this had been mentioned prior to the June 11th update, but it was clarified on June 11th and then further clarified through the FAQs. So if you put your provider relief payments in an interest-bearing account, you do need to use the interest earned on those payments on provider relief eligible expenses or lost revenue. Now, if you did not set up a separate account for these payments, you may have to do a calculation. So if your bank account earns a 1% interest rate, you would need to calculate for each month how much interest you earned net of what you expended. So if, for example, you received $100,000 in provider relief payments on April 10th, and then you fully expended those May 31st, you're going to want to calculate that interest that you earned on the funds between April 10th and the date you fully expended them based on what you're using in the preceding slides. So it's not based off of what we thought the requirements were going to be back in 2020. It's based on what the actual requirements were as of today. So the reason I clarify that is the interest you're going to claim may not be the same interest that you actually incurred. For example, if you didn't remove your PRF payments from that bank account and you just left it in there, your interest would be higher than what you actually need to claim. So you do want to do that as a calculation and not just take the number off your bank statements. Once you do that, you're just going to, there is one more slide of kind of demographic information. Oh, sorry, Stephanie, can you go back real quick? Thank you. Yes, here. Okay, so tax and single audit. We will talk about single audit in a little bit, but this is also your federal tax classification. So for example, are you a partnership or are you a corporation? Your exempt payee code and foreign, and if you have any Foreign Account Tax Compliance Act information. You'll also disclose your fiscal year here. So if you're a 630, this is where you'll let them know. Whether you're a 1231 or a 630 is not going to change the actual reporting or the quarters in the preceding steps. Next, you have your other assistance received. So they have the same categories that we were notified back in, I believe it was October of last year. So the Department of Treasury and Small Business Administration. So that's where you'll disclose your PPP loans if you received it. Next is your FEMA, if you received any FEMA. HHS CARES Act testing. Note that's not your infection control test funds. If it's through the PRF funding system, you won't enter it on this page. Next, your local, state, and tribal government assistance. So this is where you'll enter your Act 24 payments. And then if you had any business insurance proceeds related to COVID or any other miscellaneous grants related to COVID, you would want to disclose them all on step 6. And they're all going to be disclosed based on quarter. So you'll see quarter 1, 2020 up through quarter 2, 2021. For your PPP loan, you're going to record that on the date you received it. And I think that should cover all the questions on that. Okay, so then step 7 and step 8. So step 7 is where you will report all of your actual COVID-related expenses for infection control. Note that since we're in reporting period 1, you will not see this step. It'll be skipped because you will not have the infection control distributions to report on. Those all started in reporting period 2, and there's some reporting period 3 funds out there in relation to that fund. Then step 8, this is where you'll spend a good majority of your time, and you're going to disclose all of the COVID-related expenses that you did not claim through other sources. If you receive less than $500,000, then you only have to disclose them between the general and administrative expenses and healthcare related expenses. But if you receive more than $500,000, there is a couple different categories you're going to have to look at. I would recommend that even if you have the less than $500,000, that you look at the different categories so that you make sure what you put in G&A is G&A and what you put in healthcare is healthcare. Just because their general and administrative expenses isn't necessarily the traditional accounting definition. If we go to the next page, we can actually go through what general administrative expenses are. So the first couple, so we have mortgage and rent and insurance premiums. I will note that these are, like all the other expenses, only the expenses related to COVID. So you can't claim your normal mortgage expense or your normal rent expense. This would just be if you say you rented a warehouse to store PPP in, that's specifically related to COVID, and that expense would be claimable. Personnel, So this is actual personnel expenses as well as training expenses, agency expenses, contractor overhead, all your employee related expenses. Then we have fringe benefits. If you did a hazard pay or a hazard bonus, again, that was not reimbursed through the PA Hazard Pay Fund, then that's where you would disclose that. The lease payments, so for new equipment and new software leases, so again, needs to be COVID related. So if you got new software, say your company bought Zoom so that you can communicate remotely, then you can use it. But if you've already had Zoom, you cannot use that continuing expense. Utilities and operations. The biggest thing that we've seen in this category would be if you have significant increases in medical waste. And then there's a catch-all, other G&A expenses. So if there's something that was COVID related but is not covered by the categories above, you can submit it in the other category. Now, I would say a vast majority of the expenses will actually be in this one, the healthcare related expenses. So you have your supplies, which is your PPE, your hand sanitizer, your cleaning supplies. A lot of the expenses that do fall into this category will also be infection control related. Next, you have equipment. So if you bought new ventilators, if you bought the filters for your air units that have the UV lights in it, things like that would be in the equipment category. Information technology. So very similar. So this is the hardware for IT. So software was back in the other one, but this would be hardware. So new computers, or if you had an intercom system, things like that. Facilities. This would be if you have stuff related to visitation, if you set up tents, permanent, temporary, outside of the building, to allow patients to have visitors, things like that would be in that category. And then again, we have a catch-all. So if you have something that is COVID related, but is not one of those 4 things above, then you would put it in the other category. Okay, so one thing to note is when you're going through the portal, it's only going to let you input expenses up until you reach your funding amount. So if you received $100,000 in funding and you spent $200,000 in expenses, it will only let you enter the first $100,000. In that situation, you're going to want to report the additional expenses you incurred on page 9. So these are only the 2 bulk categories, so the G&A and the healthcare related. And you will only fill this out if you had more expenses that you could not put on page 8, or step 8, I should say. If you do have net expense, unreimbursed expenses, then you will not have lost revenue. So when you finish your expenses, if you did have net unreimbursed expenses, you have to disclose your 2019 and your 2020 annual patient care revenue, but it's just a bulk number. And that's if you're not claiming lost revenue. However, if you are going to be claiming lost revenue, you'll be brought to step 10. So step 10 is, I think, what we've all been kind of talking about the most lately, is the lost revenue calculation. So the final regulations have 3 available options. Actual patient care revenues. So what this is doing is you're going to submit by quarter your calendar year 2019, your calendar year 20, and your Q1 and Q2 2021 revenues by payer. So the payers are Medicare A and B, Medicare C, Medicaid, self-pay, and other, and commercial insurance. So you'll have those categories and you would just enter your quarterly information. That's the most straightforward option. The next option is you can do the budget versus actual. So the screens will look almost exactly the same, except instead of entering your 2019 information, you'll enter your budget information. Now, you can only use the budget that has been approved prior to March 27th, 2020. So if you're a 6/30 year end and in 2020 you didn't approve your budget until after, let's say, April, you would not be able to use that budget in this method. Now, there is a third option. It's just called the any reasonable method for estimating revenues option. What this will look like is you will still input the information by quarter, but you'll also submit a narrative as to why you need to use a different method. So this may be something to do with if you added units or took out units, or something like an acquisition or a divestiture may push you into option 3. Now, I will caution that they have been open that if you pick option 3, they are going to review all those narratives, they're going to review all those calculations, and they may reject your methodology. In the situation where they reject your methodology, you have 30 days to use one of the other 2 options. And then it would just be the same as if you had chosen option 1 or option 2 to begin with. Okay, so step 11 is a little different than what we had expected. So step 11 is non-financial information. So personnel, patient, and facility information. And you will have to go back to Q1 2019 calendar year. So personnel is you're going to break out all your employees by clinical and non-clinical, and then you're going to break them out between full-time, part-time, contractor, furloughed, separated, and hired. Every employee should be in exactly one category. So if they were furloughed, separated, hired during the quarter, that's the category they're going to be included on. So those top 3 categories, full-time, part-time, and contractor, would be personnel who were employed that full quarter. Clinical and non-clinical are described as those involved with patient care. So direct patient care. So some examples they give would be physicians, nurse practitioners, registered nurses, social workers, and therapists. And they do need to spend more than 50% of their time delivering that direct patient care. The separation between full-time and part-time is currently a little murky, but the way they define it is a full-time employee is more than 30 hours per week or 130 hours per month, and part-time is under 34 hours. So those do overlap a little bit, so we are hoping we get some clarification on that. A contractor is an employee who does not receive direct benefits or compensation from your organization. And then the other one I will just explain a little would be separated. So that's either they voluntarily leave, or if you decided to terminate the employee for some reason other than furloughing the employee. For patients, there's 4 categories, but the one that'll be applicable for SNFs is the number of stays, which is the last one. And it is the number of unique admissions of patients residing in the long-term or short-term care of the facility. What this means is if you don't want days, I guess is the important thing to note here, is unlike what you did for Pennsylvania, you're not submitting the number of days you had the person in the facility, you're submitting the unique number of residents you had in the facility. So if you had someone come in on December 31st, 2018, and they were still there as of 1/1/2019, they would be included in the 2019 quarter, even though they weren't admitted during that quarter. They're a unique admission that was in the facility during that quarter. So it's a little tricky and a little different than what we're used to reporting on. And then the final one, which is a little easier than the other 2, is just reporting the number of staffed and licensed beds that the facility has physically available and are licensed to operate. So this one will be pretty straightforward for most of the SNFs.
One thing that I did want to mention in the personnel, and this is just something that we've gotten questions on related to the contract staff. The contract staff would be anybody that is contracted to provide services in your facility. So it might be nursing agency, you could have contracted therapy or a contracted dining service. It's really those positions. Vendors that are just coming in to do a task and leaving, you're not going to include those as labor. It would be more someone that you would think that you would hire as an employee in your facility. You're just contracting those services. And then there was question regarding that contract staff and how you count those employees between your the invoices that you're receiving from the vendors, and also it should be something that you're tracking for payroll-based journal submissions, at least in the skilled nursing facilities. So you have a unique ID for each of those contract laborers, when they start working with you, when they stop working with you. So I would start there. If you do have someone that's tracking it for payroll-based journal, that might be a good way to be able to calculate the personnel numbers for your contract staff.
Okay, thanks, Stephanie, for that clarification. And then the last item that will require input on the portal is the survey. So the survey is mandatory. It'll ask you questions about how COVID impacted you, how it impacted your operations. They'll ask for some specifics about whether it impacted your staffing. There are both drop downs and sections for you to type in answers. I just want to note that this one is mandatory, and then there is another one towards the end that is optional. So once you finish the survey, you'll be brought to a screen that just shows you all of the information you filled out, and the final numbers is whether you used all your funding or not. So you do want to review that page in completely before hitting submit. If you hit submit, that's it. It is very, I don't think that they are supporting revisions unless it's a extreme circumstance. So you just want to be very cautious when you hit that last submit button. Okay, so now we're to single audit. So there was some clarification on the single audit requirements. So the single audit requirements are if you expended more than $750,000 in aggregate from the provider relief funds and the CARES Act funding. Now, Act 24 funds will go to that $750,000 number, but PPP funds will not. So the way you kind of can determine it is by the source of the funding. So the Act 24 funds came from the same pot of money as the provider relief funds, but the PPP loan was, or the PPP program was a loan that was ultimately forgiven. So that's why it's different and not included in this. So when you're in the portal, you'll indicate whether you're subject to a single audit in 2020. And then when you click yes, it'll ask you to whether you selected an auditor, and if you have, if you have. Now 12/31 year ends, the first single audit requirement would be as of 12/31/2021. There is no requirement before June 30, 2021. So the first two requirement periods are June 30th, 2021, if you're a June 30 year end, and 12/31/2021 if you're a calendar year end. So that's kind of different than almost every other single audit in the past, because it's normally based on your fiscal year. So this means that if you're a 6/30 year end, you're going to have an 18-month period that is under single audit, and if you're a 12/31, you're going to have a 24-month period under single audit. Okay, and then I'll turn it back over to Stephanie to go over some frequently asked questions and some stuff clarified in the FAQs.
Thanks, Desiree. So the first few questions were specific questions on the Provider Relief Fund, the HHS Provider Relief Fund site. I don't know that we're going to go through all of these. We'll cover some maybe that we've gotten a lot of questions about. These first ones are specifically related to the single or yellow book audit, which Desiree just covered. Sorry, my computer froze there for a minute. The auditing and reporting FAQ, the question was specifically related to whether or not HHS was going to release separate requirements for the SNF or nursing home infection control payments. And, the answer was no, that it is included in the information for the current reporting. And that the recipients will be able to submit the consolidated report that distinguishes the use of the SNF or infection control payments from the use of the general and targeted. And that was the area where Desiree mentioned in Section 8, where you're reporting the infection control, and then Section 9 is the other general and targeted distributions. And then again, another question regarding guidance for certified public accountants and organizations that are going to be performing the audit, and there will be the single audit requirements will be in the compliance supplement addendum. And I know currently, and Desiree, you can correct me if I'm wrong here, I think AICPA is working on some additional guidance. I don't believe that has been released yet, though. Again, more information on the single audits. The use of funds, I think Desiree covered this, the rent or mortgages, and again, it's anything in excess of what you were currently using. I think we have seen where there were some additional purchases or rentals of buildings that were used to store PPE and things like that, but just general mortgage and rent is not included. One question that we do get a good bit is specifically related to FEMA funding. We know that there are providers that have submitted for FEMA funding, and unfortunately, if you have not received the FEMA funding to cover the expenses, by the time you are submitting your report, you cannot exclude those expenses from your reporting. So you would need to include those expenditures, and then if you received funding from FEMA, you would need to return that funding. So hopefully you'll get that if you did submit funds or reimbursement from FEMA, hopefully you'll get that before the September 30th submission timeframe. The other question we received a good bit was specifically related to the receipt of purchases. So if you purchased something and did not receive it prior to, in this case, June 30th, can it be included? And it can be included. However, the cost needs to be incurred before the deadline of the use of funds. So for this first reporting period, if you purchase something prior to June 30th but haven't received it yet, you can still include that in expenditure. I think some of these others are just pretty basic questions, and they're available on the HHS website. I wanted to make sure we had time to cover some of the additional questions that we've received since we've been doing some of the webinars. The first one is, when reporting the use of funds, do you have to report the expenses before lost revenues, or can you use lost revenue? For example, the infection control funds are tied up in preventing infection control, so we don't want to use the funds that were used to purchase PPE testing. when reporting use of general distributions and save those expenses until reporting the infection control funds. So we are hoping to get a little bit more clarification on this. We're reading into the reporting and the way that the reporting works. So you are required to report expenses before lost revenue. You can't just skip expenses. You have to go through the process and the reporting, just like Desiree went through, where you have to report the expenses before you get to the lost revenue. Now, with that being said, in step 8 of the reporting, you're going to report your nursing home infection control expenses before you move to step 9. And then step 9 requires you to report the other provider relief fund expenses of the payments received during that payment period. So it states that those expenses must be used, or that those funds must be used for expenses that were unreimbursed by other sources or other sources that are not obligated to reimburse. And they further state that the other PRF payments include general distribution payments and targeted payments, except for the payments for nursing home infection control. So the way we are reading it is you can hold your infection control payments or your infection control expenses that you can use to cover that. You still need to include all of your other expenses that you would not use for infection control. The other thing, you're going to have to go through some calculations because you're going to want to make sure that between your other expenses and potentially lost revenue, you're able to use the funds for that first reporting period. So if you do need to apply some of those infection control, you can do it at that point. If not, and you've got an amount of money that hasn't been expended by holding that back, you're going to end up with a recoupment. So again, we did submit a question and we're hoping to get some clarification on that, but the way that it reads is that because it is obligated to the infection control payments, that you could hold those expenses. Again, you're just going to have to make sure from a financial standpoint that makes sense when you're running through those calculations. Another question is related to salary costs. Many times over the past few months, we have heard the phrase prepare, prevent, and treat for COVID-19. With this in mind, could we make an argument that all salary costs are addressed to this goal? What would be your opinion on this? And is there any FAQ or online that addresses the difference between salary for reporting? So there is an HHS FAQ that you would need to provide that the expense was newly incurred and based on the declaration of the PHE. And that clarification came out on December 11th. Are the expenses related to securing and maintaining adequate personnel reimbursable expenses under provider relief fund? Yes, the expenses incurred to provide and secure, maintain adequate personnel, such as offering hiring bonuses, retention payments, childcare, transportation, temporary housing are deemed to be COVID-related expenses if the activity generating the expense was newly incurred after the declaration of the PHE and the expenses were necessary to secure and maintain adequate personnel. So I think what we're seeing mostly is that you can't take your whole payroll. If you receive PPP, you want to make sure you're carving out that time frame that you applied any of those expenses to PPP, but that you're really looking at what is your general cost to operate your facility outside of the PHE. And then if you had to bring in agency staff or you provided retention bonuses or COVID-related bonuses to your staff, those would be included, but you could not include all payroll costs. The other questions were specifically related to personnel information and contracted employees. I think we covered a good bit of this when we went through the personnel, facility, and patient metrics, but does that cover both agency personnel, RNs, LPN, aid positions, as well as therapy? And the answer is yes, if they are not receiving direct benefits or compensation from the employer. Also asking about housekeeping, laundry, dietary services that are outsourced. And again, yes, if you're not receiving the direct benefits or compensation from the employer, we do sometimes see where either therapy or some of the ancillary providers, housekeeping, laundry, dining, where they're contracted for management. So the employees or the staff within the department are employees of the facility, and it's just the management that is not. So in that case, the contracted employees would be the management personnel, and the employees would be counted as your full and part-time employees of the facility. So again, it's going to depend on the way the contracts are written, but if you have agency or contract staff that you are at the facility, you're not paying their benefits or compensation, they would be included in the contract. And then there was a question related to tracking the agency hours and therapy hours for the PBJ reports, and converting them to FTEs for the quarter, but not the bodies, as they seem to want. And again, I think I mentioned this when we were talking about the personnel, but that should be something that you have internally, because for PBJ, you have to enter each individual employee. They have a unique ID, and you have to enter all of their daily hours for every quarter when you're reporting payroll-based journal. So you should have all of that information. Maybe those of you that are on this call right now might not, or those that are pulling the provider relief fund reporting together, but someone in your facility should have that level of detail, because you are required to report that on a quarterly basis. Additionally, we have some links to the reporting webpage, the FAQs that are reporting and portal specific, and then there are portal user guides. Even if you have not pulled everything together to do your reporting, at this point, we would recommend that you go in, make sure that you're registered, and complete that initial demographic information to get to the point where you then will start entering expenses, etc. You do have to go in the order that Desiree went through for your reporting. You can't skip ahead to different areas. You have to do it in that order, but it'll save you some time if you go in and enter that initial demographic information. And there is also a template out there in the portal, on the portal page, that will help you pull information together. Certainly, we're happy to help anyone that needs it, whether it's questions or helping with any of the calculations. Some of you I know are already helping, and happy to answer any questions that you all might have before we wrap up.
Thank you, ladies, for sharing this information with us today. We are open for questions, and we do have some in the question box already. But again, if anyone else has questions, please type them in, and we will get to them in the order that they were received. So we'll get started here. Are the PRF funds the funds of last resort? So apply expenses to other stimulus funds and general revenues first before any remaining COVID-related funds to the PRF funds.
So are they the funds of last resort? So I think it's going to depend on when you receive the other funds. So obviously Act 24, you've already applied those funds, so you can't use any of the expenses that you reported in Act 24 into the provider relief fund. Same with PPP. Any other funds that you applied for that you haven't received, I believe similar to FEMA, you are, unless you receive those funds which were applied to any expenses or lost revenue, you will not be able to use the provider relief fund. So it really is going to depend when you received those funds and if you have applied them to any of the expenses or lost revenue. The reporting document is very clear that you cannot use the funds to reimburse any funds that you used with other, whether it was grants or funds or PPP anything. So I hope that answers the question. I don't know, Desiree, if you have anything else to add there.
No, I think that covers everything.
Okay, the next question. If therapy is contracted to a third-party entity, do you have to report that?
So I am making an assumption here that they are talking about personnel, and yes, you will want to include those under contract employees. So under your personnel contracted, you have your full-time, your part-time, and your contracted, you would include those under contracted if indeed those employees all employees fall under the contract. Again, I mentioned there are some that are management contracts where you employ the therapists and the management is under the contract. You just have to look at the way your contract is written to determine whether they are your employees or contracted employees.
So that kind of goes with the next question. How do you track agency staff as they come and go from a third-party company?
So that should be done already in your facility. I would find the person that is doing your payroll-based journal. And the reason I know this is because there are some providers that get into glitches at the end of a quarter and need some assistance. So I've actually gone through I've gone through those invoices and keyed the contract employees in. Every employee has to have a unique ID. So when you enter them in the system, you have to first enter them in as an employee, and then you enter them in with all of the hours that they work every day within that quarter. So all of that information should already be gathered for you and is located somewhere in your facility.
Great. We have 2 more questions. Again, if anyone else has questions, please type them in and we'll get to them. We have time left here in our hour. The next question, if not subsidiary divested, but the main EIN divested, how is that reported?
Can you just repeat that again, Wendy?
Give me 1 second here. Actually, I just deleted it, so
Okay.
sorry about that. Just trying to.
Desiree, I think it's, and if you know this, and it might be one that we can pull, because I know that there were some FAQs specifically to divestiture. So if there's a divestiture, do you know, Desiree, how that is reported? Is it based on whether or not it occurs during the reporting window?
It would, yes, during the reporting window. So you'll end up reporting if you had a divestiture that occurred, say, 6/30/2020, that'll show up in all of your reporting as laid out right now, because that'll be in every single reporting period. So you'll have to disclose that every single time.
Okay, we have some more questions. Again, anybody who has questions, please type them in. Do you use other R&B revenues, Medicare and Medicaid revenues, etc., against expenses before you apply the provider relief funds against expenses?
I'm not sure I understand the question. Can you read it again, Wendy?
Yes. Do you use other R&B revenues? I'm sorry, maybe I said expenses there. Do you use other R&B revenues, Medicare and Medicaid revenues, and so on, against expenses before you apply the provider relief funds against expenses?
I honestly am not sure what the question means of using room and board against expenses. So when you go through the reporting, you're going to take all of your COVID related expenses that were not funded through any other source and report all of those expenses before you move into any lost revenue calculation at all. So hopefully that answers the question. If not, maybe the person that asked that question can write it in it and again, and hopefully we can answer that.
Okay, moving on to the next question. This is the last one. Unless others have questions, please go ahead and type them in. We still have a few minutes remaining. The next question is, and maybe it's just a comment here. I think a good idea to full-time/part-time determination would be an ACA report that may be available in a time and attendance PR system.
Yeah, I think, you know, to pull those full and part-time, certainly payroll will be able to help with that. You know, they talk that it doesn't matter whether or not regardless of whether or not they're receiving benefits. I think the main question that we get with the determining full and part-time staff is that there's that 4-hour overlap that they say full-time is 30 hours a week and part-time is 1 to 34. So we did ask again for some clarification from HHS on that, but certainly payroll should be able to assist with pulling a lot of that information for your full and part-time employees and those that have been hired and furloughed, et cetera. It's going to take a village, certainly, to get all of this information done.
No doubt. All right, any other questions? While that was our last question, we still have a couple minutes if there are more questions. And know that I will be sending out the PowerPoint as well as a link to the recording, and I will provide Stephanie and Desiree's contact information if you do think of anything and want to get in touch with them. I'm sure they would be happy to answer any questions that you have. Again, while we're waiting, I just want to remind everyone that we have more webinars scheduled. We do have a webinar, one more for this month. It's next Thursday, August 19th. It's a PDPM related webinar. So if you haven't seen that or signed up for it yet, check out the PHCA website. We also have our October convention coming up, a hybrid convention this year, in person and virtual. So that will be a little bit different than what we've done in the past. But that registration and information is on our website as well. So again, I don't see any more questions coming in, so we'll wrap up. Again, just a reminder to stay on to complete the survey. Today's webinar recording will be made available on the PHCA website. And be sure again to check out any of the PHCA scheduled webinars. We have some planned into September, and we're already looking into the new year. So, you know, check out the November, December, and early 2022, which is hard to believe we're talking about, but just look for information for those to come out in the coming weeks. So again, I want to thank Stephanie and Desiree for the presentation today. Lots of good information shared. And again, they are available for any questions that you might have. So I just want to wish everybody a great remainder to your day and your week, and stay well, everybody.
Thank you.
Thank you.